All right. So here is the quiz 4. Let's go over the answers together. Number 1. What is the easiest form of currency used to exchange for goods and services?
Cash.
Yes, cash is the easiest form. It's also the number 1 that you will see because checks, right? Checks can be easy to trade money for. However, the date that you put it on, right? That can also defer your payment. Like if you're gonna make a payment to anything and you say you write the check for the date for next year, they won't be able to cash it out till next year. So it's not technically really easily available. Money markets. Money markets are also a form of it's a form of a bond. It's hard, you can trade it for cash, but you have to go through the exchange for that. So it's not as easy. And then lastly, savings. Savings, you have to be careful with savings because if you pull out money or if you go under a certain amount, they start charging you money. So it's not super, super easy to just pull out of your savings because you would have to go from savings to checkings, then checking into cash. So it's still a while to get through. Okay? So yes, cash is the most easiest and ready available form of currency to exchange. All right, so number 2. What makes a written check valid? A, name of the person who you are paying. B, date. C, signature. D, amount. Or E, all of the above. Yes, you need to have one and not the other. Okay, you need to have all of them. You cannot have one without the other. Okay, you definitely can't cash a check without the signature. You definitely can't cash the check if the date's not written because anybody can write the date. And you can definitely not cash out a check if you don't have the amount. Pretty straightforward.
Yes.
Okay, you need to have one. You need to have all of them, not one or the other. Okay. Number 3. Okay. How do you establish a petty cash fund? A, do you debit petty cash fund for the amount you want to establish it for? Or B, take loose change and take loose cash and change and dump it in a lockbox. C, write a check for the amount you want to put in the petty cash fund. D, A, and C. D is correct. You need to have both. You need to create a petty cash fund and you need to debit it for the amount that you want. And second is you need to write a check either to it or you could actually deposit, like withdraw money and put it in there. That's a third way, but I wasn't talking about the third way. All right. Good. Number 4. How do you replenish a petty cash fund? A, debit the petty cash fund and credit cash. B, credit petty cash fund and debit cash. C, debit all cash receipts. Oh, shoot. I hit something. C, debit all cash receipts and credit cash for the total amount. Or D, debit the petty cash fund and credit petty cash expense. C is correct. You need to calculate all the receipts and you're going to write a check with the total amount of receipts. Good. Number 5, okay? What happens when the receipts in the lockbox do not match the petty cash fund? Okay? A. E. You say E?
No, B.
B. Debit or credit the cash shortage? Yes. Cash shortage or cash overage? Yes. You do not ever blame the petty cash manager, okay, and have him pay it back. No. He's not responsible. That's not his money. If he is responsible for taking the money, then yeah, you can blame him. But then again, yes. All right. Number 6. Allowance for doubtful accounts is what kind of account? A,
B,
main. Okay, C. You said C. Contra account, allowance for doubtful accounts. Yes, it is. What is it a contra account to?
bad debts.
Not bad debt. What is it a contra account to?
Accounts receivable?
Yes, accounts receivable is correct. Yes, good job. All right, number 7. What are the methods of writing off bad debt? Okay. We got A, direct write-off. We got B, the allowance method. We got C, bad debt method, or D, accounts receivable method.
E, A and B.
Oh,
Yeah,
yes, and E, A and B. Yes, E is correct.
yeah. That's where'd he go?
So we use the we don't use it. We learn about the direct write-off for tax accountants. And then we, as accountants, use the allowance method, yes.
Yes.
All right, number 8. What are the 2 ways we write off bad debt using the allowance method? Okay. C, bad debt expense and allowance for doubtful accounts. No, that is not correct.
It's A.
A, yes. We have the balance sheet method and we have the income statement method. Yes, we do. Okay. These are the accounts that are going to be associated with when journalizing the 2 methods of writing off bad debt. Okay. Number 9. Okay. A company estimates that 36,000 of its 500,000 accounts receivable will be uncollectible. Will be uncollected. Sorry. There is currently a debit balance of $6,000 in the allowance for doubtful accounts. What is the bad debt expense? How much is the bad debt expense? What? B?
B.
Yes, 36 plus, because we have a debit balance, plus 6 is going to be 42. That is correct. Okay. Number 10, a company estimates that 36,000 of its 500 total credit sales will be uncollectible. Yes, will be uncollectible. There is currently a debit balance of $6,000 in the allowance for doubtful accounts. How much is the bad debt expense?
A,
A.
Yes, because the keyword is total credit sales, which we don't care about the allowance for doubtful accounts. So yes, A is correct. All right. Which of the following can never be depreciated? A, building. B, land.
Land.
Yes, land can never be depreciated. Parking lots is part of property. Copier is an equipment. Building is plant.
yes.
All right. Number 12. What is the correct term to depreciate intangible assets?
D.
Amortization is correct. Right? Depletion is meant for land. Divide, that's what it does, but no, we never learned anything called divide, and depreciate is already incorrect. That's for fixed assets. All right, number 13. For depreciating a fixed asset, what is already determined by the rules of GAAP? Is it A, useful life, B, no salvage value, C, the historical cost of the asset? Or D, is it A and B only? Or is it E, all of the above?
E, all of the above.
Yes, that is correct. A lot of people missed this one. They thought it was only A and B. But if you read carefully, historical cost, who determines historical cost?
Gap.
That is, yeah, that's a principle of GAP. So, yes,
Almost, yeah.
it is GAP, yes. But GAP also says if you have a fixed asset, it determines its useful life already and there is no salvage value. So, good. Good. Number 14. If you purchase a machine in December of 2019, made additional fixtures to the machine to prepare for service in January of 2020, and you put it into service in the beginning of February 2020. When do you start depreciating?
C.
C.
C, yes, February of 2020 is correct. Just because you purchase it, that doesn't mean you use it right away, because we had to add some fixtures to it in January. So again, and those fixtures are going to contribute to the cost of the asset. Okay, so yes, February is correct. Lastly, question number 15. Which of the following depreciation methods should you use if you plan on using the asset often or a lot in the beginning of the year, of the beginning of the asset's life?
I think that's today.
D.
It's D.
It is, yes, D, double declining. Remember?
Well, that's why I got it wrong.
Okay, double declining is when we use the asset a lot in the beginning of its year. We try to depreciate it twice as much instead of what we normally would. Some of the years is a form of depreciation, but we haven't learned that one yet. Straight line is spreading the thing evenly across. Doesn't care how long you've had the asset. I mean, it's based on how long you had the asset. You just spread it across evenly. Units of production is based on its capacity that it can produce. So it doesn't. There's no time sensitive to units of production. Okay, good job, everybody.